So let's discover TrendDECODER, why we have developed it, and how to use it. Well, before taking a trade, regardless of the strategy, you need to perform a trend analysis. Trend analysis is always done starting from the higher time frames and working downwards, especially focusing on the time frame you primarily trade on, your main unit. Since you mentioned trading on the 4-hour chart, you need to conduct this analysis. So what I'd like you to do is walk me through this analysis using TrendDECODER. All right?
But first, could you try to adjust the price scale on your right-hand chart, the weekly one, so we can see the price levels a bit better? Compress it vertically. Yes, grab the price scale on the right axis, click and drag downwards. There you go. Very good. Great. And maybe zoom in horizontally a bit so we focus more on recent months, say October, November onwards. There you go. Excellent. Perfect. Now, please do the same scaling adjustment for the other charts, 4-hour and 15-minute, as you'll need clear views there too. Very good. That's perfect on the 4-hour. Look, we even have a superb signal from the 26th there. Now adjust the lower time frame, 15 MIN as well. Perfect. And please save this chart layout so we don't lose the setup. Excellent. Go ahead. File, save workspace. Perfect. Saved. Okay. Now, Fred, using the tools you have, particularly TrendDECODER, I'd like you to perform a trend analysis for me, okay? Start from the highest time frame, weekly, and work your way down. Simply tell me what you observe. Try to be analytical and deduce the market's current state and potential direction. Go ahead, I'm all ears.
Okay, if I analyze the weekly chart, based on what I see, the market experienced a significant rise earlier, but more recently it shows a bearish trend overall. There was a slight rise recently, but the broader picture seems bearish for the last month or so. It was bearish there, then started going up about a week ago.
Okay, what specifically makes you say it's bearish based on the TrendDECODER indicator on the weekly chart?
Well, looking closely now, I don't have moving averages displayed, but just visually we had a clear bearish phase for maybe a month there. But for this past week, roughly speaking, it's been going up quite strongly. Since the beginning of November, it's rising. However, looking at TrendDECODER itself, the indicator cloud is blue. So TrendDECODER is indicating bullish. Yes, it's blue, so bullish. But the price has broken below the solid trend line there. In reality, the market was trending downwards until the start of November. And now, what's happening now?
Okay, let's pause there for a moment. TrendDECODER provides several pieces of information, and let me explain why trend lines can be more informative than moving averages. It's not just because I created this product, but based on how they function. By definition, a moving average always lags. A 20-period moving average, for example, reflects the average price over the last 20 periods. This means its reaction to current price changes is delayed. The trend line used here is based on linear regression calculated in real time. Mathematically, you don't need the details, but essentially, a break of this real-time trend line, the solid line, tends to be more responsive than a moving average crossover. You can even test this later by adding a moving average to the chart and comparing. You'll likely see the trend line break provides earlier information. So, TrendDECODER indeed shows you, via the solid line, that the real-time price action has broken the previous trend structure, or at least the trend is decelerating. The dotted trend line is what I call a projective trend line. It represents the slope or angle of the previous significant move in the opposite direction. Why? Because markets often exhibit a certain symmetry. Accelerations and decelerations in trends frequently occur at similar angles.
I noticed that upward and downward movements often share roughly comparable slopes, so this provides additional context. Here, you can see the current solid trend line's angle is somewhat similar to the previous major upward move slope, represented by the dotted line. Furthermore, you also observe that the price has broken below both the real-time solid and the projective dotted trend lines. All this indicates that the preceding weekly uptrend has encountered significant weakness. Additionally, the price has penetrated the blue cloud area, which acts as a dynamic support resistance zone based on price action. This combination gives a very clear alert regarding the health of the prior uptrend. That's why the gray box has appeared. When the gray box is present, What does it signify? It means the price is currently consolidating or moving sideways. The market is uncertain about its next major direction. Within this gray box, different price patterns can form. Statistically, certain patterns within these consolidation zones tend to lead to specific outcomes. Right now, the internal structure suggests a potential lateral movement, perhaps a pause before a possible continuation upwards, continuation breath. But this interpretation can change. As long as the gray box remains active and the price candles haven't decisively broken out of it, the market hasn't confirmed its next move. For now, you just know that the price is likely to oscillate sideways, roughly between the bounds of the gray box, which are currently around 14,488 and 150344. All right? It might adjust slightly. So, I agree with your initial assessment of recent upward movement, but the weekly context provided by TrendDECODER adds crucial nuance. You can see that within a single indicator, you understand that we were in an uptrend, which hasn't been fully invalidated yet, but has faced a significant challenge. You know that in the current weekly perspective, we are essentially in a range-bound phase. You have the approximate upper and lower boundaries of this range. That's the key takeaway from the weekly analysis. It suggests caution as the market isn't strongly trending on this time frame. You're not statistically in a clear uptrend or downtrend. The market is moving sideways. You just know the likely boundaries for now. However, as you can see, the range between roughly 14,500 and 15,340 offers about 800 points. There's certainly potential to make money within an 800-point range. Now, let's switch focus to your main trading time frame, the 4-hour chart, and I'll listen to your analysis there. Apply the same analytical process using TrendDECODER, real-time and projective trend lines, the cloud, the background color, any signals. I'll let you take the lead.
Okay, on the 4-hour chart, well, the cloud is blue, the trend lines are pointing up. Both are adjacent, suggesting alignment. So yes, they indicate an upward phase here. We are moving up. The market shows an upward tendency in this zone. If I glance at the 1-hour chart, it's likely also rising. What else can I say? For the moment, the market is clearly trending upwards on the 4-hour. So we can say that, yeah, it aligns somewhat with the recent weekly candle being green. It doesn't contradict that. And what else? What I also notice, however, is that Blade Scalper has identified something here. There's a pattern zone.
Excellent observation. Let's pause on that point for a moment. So, if you were to summarize the overall market picture based only on your multi-time frame trend analysis so far, what would be your conclusion? Start from the weekly context and integrate the 4-hour view. What does this tell you about potential price direction just based on the trend analysis alone?
Honestly, I would say the market is currently moving positively upwards, but it feels like it could reverse at any moment. We aren't entirely certain about its long-term direction. The weekly chart shows consolidation, while the 4-hour is clearly bullish right now. I'd say that on the 4-hour chart, yes, based on the 4-hour trend, we could look for buying opportunities because compared to the weekly sideways movement, the 4-hour shows clear upward momentum for now.
Okay, but before deciding to enter a trade just based on the trend analysis, what overall conclusion can we draw? You mentioned uncertainty. Where does that come from?
I would say fundamentally, we don't really know for sure where the market is ultimately heading.
Well, I would slightly disagree, or rather, refine that. Based on what you just described, I do know some things. I know that on the weekly time frame, I'm within a consolidation box, a range. This range currently shows an ascending internal structure on the 4-hour chart. So my prices are likely to oscillate with a high probability between the weekly range boundaries we identified earlier, roughly 14,600 and 15,344. Indeed, the price recently went up. You can see a small wick on the weekly chart that touched near the top of the gray range box. So the price tested that upper boundary. It tested the previous high within the range. Since it didn't break through decisively, I'm still operating within those two main weekly levels. I also see that on the 4-hour chart, the immediate trend is still ascending. And looking ahead on the 4-hour, I see potential resistance zones appearing higher up around 15,500, aligning with the upper areas suggested by the power zones. Now go back to the 4-hour chart's price scale. Adjust it again so we can see potential support levels below the current price. What support zones are visible? Position yourself on the price axis on the right.
You need to compress it vertically again, just like you did for the weekly chart. Yes, click on the scale and drag upwards this time to expand the view downwards. Keep going. Very good. And you can see there's a significant power zones area visible around 14,500, 14,600, which we need to keep in mind. So what I know now is that for the moment, the market has shown upward momentum. It's eyeing the 15,500 zone, though it hasn't quite reached the 15,550 level yet. And I am still within a broader upward trend structure on the 4-hour chart, specifically since around November 8th. So indeed, I'm in a fresh upward leg on this time frame. That's what the trend analysis tells me. And the 15-minute chart likely confirms this short-term upward move. But contextually, I'm operating between key weekly levels. Okay, now let's integrate the next layer of analysis. You just performed a crucial step, multi-time frame trend analysis. Thanks.